right off the bat, one of the things we're trying to square is Kevin Hassett, the NEC director, saying to expect weaker jobs. And then we get this blowout report. How do you reconcile the two?
Great. Thanks so much for having me. It's a pleasure to be here. You're absolutely right. It's a blowout report. It exceeded almost every single forecaster out there, I think, except for two. And not only is it total jobs that are up above expectations, it's also private sector jobs that are at 170,000, so more than, or 160,000, which are more than double expectations. I think the way to think about the way we were thinking about it is if you look at demographic changes as well as the big reduction in immigration relative to, in particular, illegal immigration relative to what was happening under the Biden administration. Those two factors should lead you to lower break-evens, and that's consistent with what a lot of forecasters have put out there. So given that you anticipate lower break-evens, it's even more remarkable to get a job number that is that strong.
Yeah, I mean, the fact that we are looking at unemployment at 4.3% and, adding double the amount of jobs that Wall Street had anticipated makes me wonder about rate cuts. I mean, are they really necessary here when the labor market seems to be doing fairly well and inflation is still a huge problem for consumers?
Well, listen, when you look at inflation, inflation has been trending down. It can be volatile for months.
But it's still high on top of already high numbers. I mean, we're adding insult to injury here, so...
If you look at 3-month inflation rates, it's very low. It's within the normal ranges. So, and if you look at the trend lines, it's been low. Now, I don't know where it's going to come out on Friday. It could be that there's some seasonal adjustments because of a very cold January. But overall, you see inflation trending down. The Fed does have to balance its dual mandate, and it's got to be consistent with what its strategy review instructed it to do, which is to focus on the type of job growth and the type of labor market that's consistent with
Pierre, I think part of the concern, and Matt was getting at this too, is that we clearly have a strong jobs market. And even if inflation is trending down, it's not at target. And then you have the president of the United States saying that if the new Fed chair does his job, we'd have growth at 15%. All of that feels like a recipe for inflation. So is it a mistake then to be pressuring this Fed to move away from a focus on inflation?
The Fed should be the forward-looking, not backward-looking. So when you're looking at inflation, you shouldn't just be responding, or jobs, you shouldn't be responding to what's happened in the past. You should be looking at what's going on in the future. So if you look at what's going on in the future, it does look like we have significant productivity growth. So in the face of significant productivity growth, that puts downward pressure on inflation. The president's supply-side policies, deregulation, tax incentives for investment, all of those factors lead to significant productivity growth, not to mention the big explosion in AI. So in the face of productivity growth, which we haven't, this type of productivity growth may be reminiscent of the type that we saw in the 90s. That would be disinflationary growth that's consistent with a healthy labor market. And so that's what the Fed should be thinking about.
All right. I mean, the prices consumers are paying are still a problem. Affordability is still a problem. But let's put that aside if you don't recognize it and focus on the labor market. The labor force grew by 387,000 in January. And I thought we would see the labor force shrinking because of immigration policy, mass deportations. What do you attribute that growth to?
If you want to look at the labor force over time, I think the best way to look at it would be in terms of the census, because month to month it's going to be a little bit difficult to assess this using the household survey. So over the past year, what we do see is that relative to trend, the labor force growth or the population growth has declined, and that's consistent with the evidence that we got from the census. So according to the census, we had relative to trend something like 300,000 fewer lower population, and so in light of that, you would anticipate that should continue into the next year.
Pierre, if you look at where the job growth came from, 82,000 jobs from healthcare, social assistance increases 42,000. That's 95% of the jobs that were added in the past month. This is a non-farm payrolls. That was virtually all growth coming from healthcare and social assistance. It's a trend that we've continued to see because of demographic changes. But does that mean that this growth is less healthy if it's really only being held up by one industry?
You have to consider the base when you do that kind of analysis. Most of the jobs that we have in this economy are services. So on a proportional basis, that's the right way to think about it. So on a proportional basis, those are growing, but you would anticipate larger absolute values given that it's a larger portion of the economy. And as you mentioned, if you have an aging society, it would be natural that we would get a little bit more employment growth in healthcare.
By the way, manufacturing added jobs. We got 5,000 new manufacturing jobs in January after a string of losses. Fair to say last year wasn't great for manufacturing. Are we going to start adding more manufacturing jobs to this economy as the president's policies take hold?
Let me talk about construction, then I'll talk about manufacturing. In terms of construction, we saw significant increases in construction over the past month, especially if you look at non-residential construction. That's consistent with the president's economic policies. So because of these economic policies that are there to drive investment and factories in the economy, you saw an increase in construction jobs. If you look at what we should anticipate more manufacturing jobs as a consequence. But if you look at manufacturing holistically, you can see that manufacturing value added, the growth in manufacturing has been very strong. In addition, if you look at manufacturing productivity, that's been very strong this year, and then that's been reflected in significant growth in manufacturing wages. I mean, one thing about the report, of course, is that the report showed that average hourly earnings, weekly earnings, those are up, and they're up across the board, and they're up in manufacturing.
Pierre, we also had government jobs falling again. How many more do you anticipate? Do you think that this trend will continue of government jobs coming off?
I think what the administration wants to do is to ensure that the government is right-sized. And when you look at where the government is right now, we're at the lowest level of federal government workers since 1966, which is quite remarkable. And what's true is that there's significant waste, fraud, and abuse, and we need to right-size the government and ensure that all of our workers in the economy are put to their most efficient use. So when you have government workers that lose their jobs, they're reallocated towards the private sector. And what's been remarkable is that even after the QCW revisions, you see that you've got 615,000 private sector jobs in the economy, and that's the way to grow the economy, to ensure that everybody is put to their best use.